IQVIA just became the top gainer in the S&P 500 today, up over 12% after reporting a clean earnings beat. Adjusted earnings per share came in at $3.15 versus a $3.04 estimate. Revenue was $4.37 billion, up 8.7% year-over-year. But the number that really moved the stock, record net new bookings of $3.15 billion, up 19% year-over-year, with a book-to-bill ratio of 1.22. That means for every dollar of revenue recognized, IQVIA is booking $1.22 of new work. The pipeline is growing faster than revenue. Management raised full-year guidance to between $17.275 and $17.475 billion in revenue. Baird named IQVIA a fresh bullish pick with a $249 target. IQVIA runs the world's largest network of clinical research data, connecting drug companies with patients and trial sites across 100 countries. Stock is at $242, up 22% in the last year. Follow StockScope Radar for daily market breakdowns. Kiniksa Pharmaceuticals just jumped 25% today after reporting a dominant quarter. Q2 revenue hit $243.6 million, beating estimates by nearly $14 million. Every dollar came from Arcalyst, its drug for recurrent pericarditis, which grew 55% year-over-year. Recurrent pericarditis is a chronic inflammatory heart condition that causes repeated episodes of chest pain. Arcalyst is the only FDA-approved treatment for it. The company then raised full-year revenue guidance to between $980 and $995 million, well above the $958 million analyst consensus. Cash on hand is $468 million with no debt. Pipeline drug KPL 387 is in Phase 2 and 3, with data expected in the second half of 2026. Wedbush just raised their price target to $72. The stock is at $79.44, up 201% over the last year. Follow StockScope Radar for daily market breakdowns. Itron just jumped 27% today on a quarter where the profits told a very different story from the revenue. Revenue was $563 million, slightly below the $577 million estimate. But adjusted earnings per share came in at $1.59 versus a $1.30 estimate. That is a 22% beat on the bottom line. Gross margin hit 41%, a new company record. Free cash flow was strong. The CEO called it clear evidence of structurally better earnings power. Management then raised full-year earnings per share guidance to between $6.30 and $6.50. Itron makes smart meters and sensors for utilities managing electricity and water grids. The demand environment is driven by grid expansion, resilience upgrades, and the time-to-power urgency around data centers. Revenue may be flat, but the business is becoming more profitable every quarter. Stock is at $107, up 27% today. Follow StockScope Radar for daily market breakdowns. Safety Insurance Group is still holding near its acquisition price, and today AM Best called the Mapfre deal strategically compelling. Here is the full picture if you missed the original announcement. Last Thursday Mapfre, the largest Spanish-owned insurer in the world, agreed to acquire Safety Insurance Group for $105 per share in cash, a 44% premium. The deal creates the second-largest writer of private passenger auto insurance in New England and the largest homeowner and commercial auto insurer in the region. AM Best affirmed Safety's A-rated financial strength and said the combination makes strategic sense. The stock is at $103, just below the $105 cash offer. That $2 gap is the merger arb spread. You are essentially buying a dollar that will be worth $1.05 when the deal closes in Q1 2027, if it closes. Closing requires Massachusetts insurance regulator approval and shareholder vote. Follow StockScope Radar for daily market breakdowns.